What is musharakah? In this video, inshallah, we'll be covering the main concept of musharakah and what musharakah is in the area of Sharia finance or Islamic finance. Musharakah is one of the key modes of financing of Islamic business and Islamic economic progress. So I have another video on the channel which talks about this in general called Islamic Finance Explained. Definitely check out that video where it gives a brief illustration of what musharakah is, along with the other concepts that we will be covering in these separate videos. So musharakah means to be in partnership, to have partners. So of course it comes from the root word of sharik or sharika, and that means partnership. So musharakah is divided into two types. The first type of musharakah, and the one that we'll be concerned with, is musharakatul amwal. Yes? And what that means, amwal means wealth or mal, which means property and wealth. The second is musharakatul aqd, which is a contract. Now there are always contracts involved in both of them, but musharakatul amwal is where people come together and they pull together resources. Resources in today's day and age will only really be money, but it could be, for example, equipment and plant and machinery. So for example, you may have two brand new people who want to go into partnership and they put together some money to invest in some new plant and machinery or some new products, and then they will go and sell that product. So that's musharakatul amwal, one of the examples. Another would be two businesses that are currently running their own independent businesses, but maybe one of them comes up with an idea, or maybe a third person comes up with an idea where we can utilize some of the plant and machinery from one business and some of the plant and machinery from the other business, and then they come together, they bring it together to form a third business. And then that third business would be a musharakah between the parties involved, whether it's just the two existing business owners or that third person, for example, who may be proposing that concept to do business. So musharakatul amwal is pulling together money or resources, and this is physical resources, for business activity. So that's musharakatul amwal. You have musharakatul aqd. Musharakatul aqd is different. It's more where two people come together or multiple parties come together and they want to form a partnership. Now normally they will not be investing resources, but they will be investing effort. So maybe there's two people and they have a particular skill. Maybe one is a businessman and the other person is a cook, and they want to open a restaurant. So the business person will take care of the business aspects of the business, the marketing, the sales, the promotion, finding the shop maybe, and the cook, he will be doing the labor. Or maybe it may be that one is utilizing their own premises because they're not going to put any investment in art. So maybe they've got an existing kitchen in their house, which is a large kitchen, and they can do some manufacturing in there, and there's an actual cook who's a really good cook, and then he's going to come together with this other person who has the kitchen, and they will start maybe a restaurant business or a takeaway business, whatever it may be. So this is where people come together, partner with skills. Yep. So this is where people partner with skills. So musharakatul amwal is where you're putting money in together, and musharakatul aqd or resources. Musharakatul aqd is where you're putting your skills in together, and that's normally for skills-based businesses in any case. For the purposes of this video, we will be talking about musharakatul amwal. So let's get rid of the other ones, and we don't need this because we already know that we'll be talking about musharakatul amwal. So musharakatul amwal, let's say for example there are 5 people and they want to buy a property for investment. So we have property which is worth, let's say, just to make the numbers easy, £100,000, and you have 5 people, 5 partners who want to invest in a property. So then, okay, you've got 5 people and they want to invest in a property. Oops, that's the wrong thing. And I'm going to put this person separate. I don't know why that's an A, but this person's separate. So if you've got 5 partners and they want to invest in a property which is £100,000, then of course that means that each person will invest £20,000, 20k each investment, and that means they will have a 20% share, equal share in the property. So each one of these individuals, there's a reason why I put this person separate, because we'll be talking about what this person's role may be. So 20% share, £20,000 each, and they go and purchase this property. So this property is now being purchased by the shareholders, and they're all 20% shareholders, of course. And that property is now generating a 10% yield. So a 10% yield would be £10,000, of course, per annum. So so it's currently generating £10,000. So that means each partner, as long as there's nothing that comes about in the business, in the property which needs to be repaired or anything, they will get their share, their £2,000 each. Now, with Musharakah, what can happen is that, yes, all 5 people are equal partners, 20% shareholders each in that business, in that property. However, they could appoint this partner over here as a property manager. And their agreement will be that for being this property manager, the property manager can get a wage of £1,000 for being a property manager. So this, let's put manager, is now taking £1,000 from the £10,000 for being the property manager. So if there's any repairs that need to be taken place, or the upfront work of getting the property let or anything like that, then of course this person will take a £1,000 out of the 10k, which means that there is actually £9,000 of available profit which can be returned to investors. So there's no longer 10k. Why? Because £1,000 is going as a wage to the property manager. Now that means that this person over here is still a 20% shareholder, but they're also getting a £1,000 wage. So now the available balance that can be transferred to these 5 individuals is £9,000. And if you just do the deduction, I think it's like £1,800 that is remaining to be distributed to the shareholders. And that is what Musharakah can be. So with Musharakah, you can have shareholders who are also working in the business and getting a wage. And then whatever's left over with the profit is now returned back to shareholders. Okay, and that is one of the key differences. Mudaraba, which is the other concept which we'll be talking about in the other video, which is specifically for Mudaraba, that will cover something else where there's a difference in here. Now, one thing about this £1,000 wage of this manager, it must be agreed in advance. So the contract, the shareholder contract, there must be a manager's contract as well. In advance. That's the key thing, in advance. So the proportion of ownership is the same, but the ratio of the profits is different. Why? Because this person is earning more than these 4 individuals over here. Because they're essentially not doing anything. They have invested their capital. This person is doing something, so they invested their capital and their efforts. But it must be agreed in advance. That's absolutely key. So that's if everything is going fantastic, if everything is going well. But for example, if there's risk, so let's say there was a couple of months where it was rent-free because there was no tenant in the property, then that £9,000 profit might go down to only, £6,000, for example. Only £6,000. This property manager will still get their £1,000. That means there's only £5,000 of available profit to be paid back. That is now going back, £5,000 to the investors. So they will share equally in the downturn. They will share equally in the downturn of that return on investment. So they're still getting 5%, which is a decent property return, especially if you're in the sort of the bigger areas. So that is, they also share in the risk of any downturn in the economic climate of that particular investment. Now, let's say, for example, this is a business. So if there's a business, it's a little bit different because the investment is a little bit more. The salaries are normally a little bit more as well. So the contract and everything stays in advance. But now let's say they're investing £1 million in total. There should be another 0 in there. Now they invested £1 million in total, and their investment business should return normally a higher yield than property. So, or higher return on investment, that's what it's called, return on investment, ROI. So let's say, for example, it's supposed to get them back 20%. So of course that means that every single year it should pay them back about £200,000. £200,000 return on investment. Now this manager, for example, for managing the business is now getting a £50,000 wage for managing this business. So if they're getting a £50,000 wage, that leaves £150,000 which can be returned back to investors, and that goes up. Now, as we know, in unfortunate circumstances, there could be a risk. There could be a loss of the total capital. So if there is a loss of the total capital, each shareholder is only limited to the share that they put in. So they can only ever lose £200,000, because don't forget that, okay, that went to 200k, right? So they can only ever lose £200,000 each. They can only ever lose £200,000 each. So that's the risk that they are putting in. So the amount of money that they've put in, that's their risk. Now, what happens if, for example, this manager goes and takes a debt on the business without telling these? Now, with Musharakah, because they're equal shareholders, normally there would be a vote, and of course they would say, okay, we want to approve the debt. But as this person may be the sole director on the business, this person may think, oh, you know what, I can take debt in the business and I can move the business even further. Instead of it generating £200,000 in profit, maybe it will generate £300,000 this year. They took a calculated risk, however, that risk didn't pay off. So what happens is that this person is now liable for their debt, but these people are not liable for the debt. So these shareholders who did not authorize the debt, they are still only liable of their £200,000. Let's say the value of the debt was 100,000. So 100k debt he took on, or the business took on because this director signed it off. His liability is now £200,000 plus £100,000 debt. So if an individual acts by themselves, this person will now be liable for a further £100,000, where these partners will only ever be liable for £200,000. So that's one of the key differences with Musharakah, is that the partner who took on the risk to take that additional debt, then, and this by the way applies to only very small circumstances, it means debt, not downturn in business activity. Downturn in business activity, they're still all equally liable for that loss. However, he's taken on debt without the authorization of the other four shareholders, and therefore this person is liable for more than £200,000. They're now liable for the £200,000 that they initially put in, plus the £100,000 in debt. So Musharakah just means it's a very fair partnership between investors, and it's the most common, especially when you're pooling together money and you're going into partnership with a property or a business, whether it's a startup or whether you're buying an existing business or whether you want to invest in an existing business. There's many different ways that happens. Inshallah, in the next video we'll be covering mudaraba, but there are many other videos like Islamic Economics Explained, where it talks about asset-based investments and business-based investments, and there's other videos like Islamic Finance Explained, and of course the different types of funding solutions that we offer. Definitely look at those videos and see if you're interested in getting some business finance for your particular business, then click the link in the description and inshallah we can talk more about that. Of course, Sharia FM will be launching our own business fund where we will be investing in existing businesses. That's what I've been doing for the last many years, and alhamdulillah, very happy with the work, of course, and also a very good profit, return on profit as well, or return on investment, generating a profit. So click the link in the description and book a call with us if you're interested. If you're interested about investing in business, then definitely give us a call. It would be Musharakah based on the pool level. We're pooling together money, but the investment will be mudaraba. And that's why it's important for you to wait for the next video and click on that video, inshallah, and definitely watch it. Subscribe.